Joint Managing Director with Prabhudas Lilladher, is joining us right now. Amisha, good morning. Good to have you here. First question, I just want to get a view from you on the market. You think there is more downside, more meaningful downside, or like the last time towards the end of March when the Nifty got to just under 8,300, we will see a recovery?
So I would think that, this the bearish overturn and the weakness in the markets will persist for a while. But I think a good amount of distance in terms of the correction we have already covered. And in and around 8,000, I will now start selectively looking at, investing again. But I don't, of course, rule out little more time which will be passed during this sideways to volatile markets.
Right. So you would say the market does nothing, muddles around for a while, or we could see another 5, 7, 10% correction from here, from these levels?
So I wouldn't be in, I'm not in the camp that market can see another 10% correction. I could be wrong. But I think that a 3%, 4% kind of a correction further cannot be ruled out. And in and around that zone, I will be a buyer. So instead of saying that some time back, at every rise I was a seller, I would say from here, at every decline, I'll be a buyer.
Every decline, you would be a buyer. And these are as good a price as any to start doing that, right? To start buying. You wouldn't, I mean, as they say, nobody rings a bell at the bottom.
Because some results, precisely. Yeah. Because some results, do throw good opportunities in this market, which is slightly corrected, then I wouldn't wait for everything to fall in place, and I don't think that quite happens. So I will then, that's why I say that selectively I'll start looking at augmenting portfolio, even at current levels where either result, either direction from the management or some other developments give confidence.
Yeah, okay. The pharma index is down 13% in the last 2 weeks. IT index is down about 12% in the last 2 weeks. Are those good places to start looking at stocks as stocks to buy?
I would think so, selectively, yes, but I won't go overweight in either of these sectors. I think both these sectors bore the brunt because most of the FI investments had also come in these two sectors. So most of the overstretching of valuations had happened here in these two sectors, and unfortunately IT also disappointed to some extent in terms of 4Q performance. So to some extent I would say the correction is pretty much justified as far as IT is concerned, but within that selectively to us Infi looks very interestingly poised. The way they are talking about above industry growth by FY17 and courage to give a 2020 kind of a guidance gives us a very encouraging outlook for the stock, and that's one place that we would like to look at now, and of course if correction persists beyond that for investments. Like for example, yesterday United Phosphorus came out with results. Of course the stock has done well over last 2 years, but the continuity in performance, top line, margin improvement, free cash generation gives further confidence that the stock at every correction, including the current price, is a good bet for investments.
Amisha, why don't you lay out a list of names that you think have fallen quite a bit, which are strong companies, strong earnings visibility, that you are quite comfortable with? You said United Phosphorus is one of them. Which are the others?
Yeah, it has not fallen much though, but the results and the outlook continues to be good. So for example, I think in the banking space also, Federal Bank, which is a kind of semi-private bank, so to say, because the culture is a mixed culture, has fallen, I believe, from almost 150, 55 levels to 120, 25 levels, and has reasonably good outlook in terms of both asset quality pain as well as reasonable management team and good valuations. So I would be a buyer at these rates, even in Federal Bank. I think then a lot of stocks has fallen, but a few remain in our radar. And within that, I think there is one, this KPIT Technologies, which has fallen substantially, of course. And there is some major selling also, but we still that the underlying business outlook as well as the growth continues to remain reasonably attractive at these levels. So that's one more stock that we would be looking at. This is as far as mid caps are concerned. In large cap, of course, market has given a huge thumbs up to ICICI Bank.
And we also, KPIT was about 230 odd rupees, not very far back at the beginning of April 2015. Absolutely. It's at about 145. What's gone wrong though? It seems pretty climactic, the way it's sold. I mean, every day, just lower.
Absolutely. And if you see, except that they have officially come on record and reduced their guidance because of both cross-currency headwinds as well as a bit of slowdown in terms of their clients' accounts penetration. But I don't think it deserves this kind of a huge correction. So at this level, I think it's very, very interestingly poised.
Okay. But what soured the picture for KPIT was bad earnings, is it? In the last quarter, the third quarter.
Earnings warning, and I think there has been a good amount of, there is an exit, I believe, from some private equity or something, which also could have caused a bit of, a sudden kind of a fall. Of course, their earnings warnings was a complete surprise to the street.
Yeah. But that was not the only IT company to put out a warning. Actually, this was the season of earnings warnings for IT companies before the results. So, Federal Bank, United Phosphorus and KPIT. Any other mid-caps that you've got on your list? Because I have a few names that I want to ask you about.
I'll be happy if you want to check on a few names.
Okay, Bata India, again, I mean, some 40% lower, very quickly.
So Bata at current rate, I think so, they are going through a bit of upheaval in their own business in terms of both margins and etc., etc. But yes, I think at current level, for investments purpose, one can look at it.
But what's gone wrong? I mean, numbers, I don't recall numbers being a big disappointment or anything. Some have been saying, well, it's e-commerce, right? If footwear is an important category sold very aggressively online. And hence that's online, over a period of time going to hurt Bata's business. Is that it?
Yes. But that could be just a small part. But if you see it both in terms of growth and their cost structure, they've been revamping a bit and the margins have also been a bit under pressure and they need to really complete the restructuring of course as well as the stores and bounce back in terms of margin, which is getting a bit delayed every time, which has been a bit of a disappointment.
Just Dial, was high was about 1900 rupees, stocks at about 1060.
So particularly for Just Dial, this, of course, as of now, the balance sheet, the cash flows are okay. But here the expectation to justify the valuation is growth. And for that growth, the way the entire space is moving with huge cash burns, if the management outlook is very different in terms of cash burn, then to capture market share remains a big question mark. So, they've been trying a few more efforts to give that e-com outlook to the business model, and it's not been really coming in place. I think almost last 12 months plus has gone before it could really take off. So I would still keep it under a wait and watch. I wouldn't be in a hurry.
Jindal Steel and Power is down about 50% from, I think, over a 1 year period or so.
And also a lot of, events panned out in such a way that the business model itself went topsy-turvy. And of course, it's become a little cheap, but I don't think in a hurry the stock is going anywhere. Once again, one would like to wait and watch how things further pan out in terms of some of the key policy or rulings from court, the way they impact them. Maybe the downside could be limited, but I don't think in a hurry stock will run up.
Jammu and Kashmir Bank, 45% last 1 year.
So they from a special bank where there are very limited asset quality issue to they also started showing all the pains of the asset quality, and rightly so, because it's also part of the system. They've been growing book, giving it to the same names more or less. So I think that the whole premium which they used to carry as compared to PSU has been lost. But at the same time, I don't see any special sparkle as to why this should be looked at. Any specific reasons I don't find for this, and I would prefer, frankly, Federal Bank over that.
Bajaj Electricals, stocks at about 228 or so, which puts it about 30% lower
To me
now.
looks correct. That one to me looks a little interesting because they also went through a little issue as far as their the EPC venturing into the EPC side concerned, and they had their own share of problem. I think from here on, this stock looks interesting.
Jain Irrigation, stocks at about 58, 59.
I don't think I'm so up to date to make a very concrete comment, but not at very aggressively that I'm looking at it. But I may be wrong, but I don't have a very special comment to offer, frankly.
All right, I think that does it for me for today. Thank you for answering all those
so
questions on all those stocks. Appreciate you coming on, Amisha. Great speaking with you. Amisha likes United Phosphorus, Federal Bank, KPIT, and she thinks these are good stories that
include some independent